Day trading is the buying and selling of a financial instrument within a single trading day in an attempt to profit from small changes in that instrument's price. Leverage can help day traders to maximize gains, but it can also result in substantial losses. There are various short-term strategies, usually based on current market conditions and the time of day, that can give you the best chance of capitalizing on market fluctuations. So how can you actually identify a promising day trade? At IG, we offer a range of analysis tools to help keep you on top of market conditions and act when the time is right. We're going to show you 3 potential ways of choosing a short-term trade using the IG Trading app for the iPad to demonstrate this. So the first way is to look for opportunities around a company's earnings announcement. A firm's share price can be particularly volatile around an announcement, especially if the figures are significantly better or worse than anticipated. If the earnings outperform expectations, the share price generally rises. However, if the earnings disappoint, then the share price is likely to fall. You can use our economic calendar to see which companies are releasing results on any given day. On the 18th of February, for example, I can see that BAE and Centrica are releasing earnings results. Today, Rio Tinto has just released quarterly results, and these were worse than analysts expected. Let's log into the IG Trading app and see what the market is doing. Let's look at the Rio Tinto chart. We can see that the share price has been trending lower since the beginning of November last year, and we've drawn a downward trend line using the Drawings tab and the trend line function to illustrate that. We've also seen that the price has risen since the lows of January, and we've put in a rising trend line over the shorter term to indicate the increasing price, also using that trend line tab. Finally, we've added in a support line using the horizontal line and the Drawings tab to illustrate where the price bottomed down in January and found some potential short-term support. Immediately after the market opened, Rio Tinto shares dropped sharply over 7% because of the poor earnings announcement, falling through that rising trend line we drew from the beginning of February. However, they stayed above the support level that we noted that held throughout the middle of January. As a result, we decided that the short-term move might reverse over the course of the day, and we decided to buy the shares. We bought 100 shares as a CFD at £16.18 a share, with a stop of 60 points lower and a limit of 100 points. The second way an opportunity might present itself is when a breakout occurs. A breakout refers to a market price that moves through its defined support or resistance level. A support level is the point at which a price tends to bounce back, and a resistance level is the point where a market tends to rebound towards the downside. Once the market moves beyond one of those barriers, volatility tends to increase and prices usually trend in the direction of the breakout. So, entering a long position after the price breaks above resistance or taking a short position after it breaks below support can be a sensible move. Let's take a look at the FTSE 100 then. So, looking at the FTSE 100, we can see that the index has been trending lower since the beginning of February. However, it encountered support around 5600 level. During the course of the session, it then broke below this support level and continued to move lower. Having broken below 5600, the likelihood is that the price will continue to move lower, down towards the bottom end of this descending channel that we can see on the chart. Indeed, it might continue to break through that level and push on yet lower. Having seen the FTSE 100 break through that support area around 5600, we now expect it to continue lower, and we have placed a trade in the direction of that move. We've sold the FTSE with 3 contracts, and we've put a stop in at 80 points away, just above that previous support level of 5600. We've also put in a limit order of 110 points away, down towards the next key support level of 5425. The last method we'll show you involves using technical indicators to identify opportunities. We're going to look at the Stochastic Oscillator. Now, it reveals whether an instrument has undergone an extreme move that may potentially reverse in the short term. A reading of 80 or higher indicates that the market is overbought. Meanwhile, a reading of 20 or lower suggests that the market is oversold. As prices can turn once a market becomes overbought or oversold, the oscillator typically provides a good indication of where the market may head next. So let's have a look at the pound against the US dollar there. So having opened our chart of the sterling US dollar then, we can see that we want to add the stochastic indicator. We do this by tapping the chart and then selecting the stochastic. We can see that the indicator went below 20, indicating a potentially oversold market, but then began to turn higher. Because of this moving indicator, we decided to buy the pound against the US dollar. We bought one contract with a stop 40 points away at around 14425 and a limit of 100 points away at 14564. So here we've looked at three methods that are often used to identify promising short-term trading opportunities. As part of a broader strategy, these methods can help you enter the trade when the time is right. But remember, there are no guarantees of which way a market will move. Short-term trading is inherently risky, so you should consider all the factors that will affect your chosen market. It's important to monitor your positions closely and use the appropriate stops and limits to secure profit or to cap potential losses. Thanks for watching, and remember, you can find out more about the range of analysis tools available to you on the IG website.